Greetings, Dr. Jeffrey Scott, and this is my weekend market update from June 19th, 2022. Actually, there's a fib on this slide. I did one live from Orange County at the weekend seminar that we had from Greg Mills, David Larson, and others. I really had a great time and thank those guys for putting it together and the folks that attended both live and online. But when I listened to it, although the content's great and it's pretty educational, got beyond just what the market's doing, the audio wasn't so great. So I'm going to record a briefer version. And for those who are at the meeting, it'll be in your Dropbox as well, this version as well. And I'll post this one for the folks out in YouTube land. So again, my name's Jeffrey Scott. My contact information is right there. And we really had a wonderful time. A live meeting talking about stocks. Used to do it all the time. Paid honor to George Lee, who's not with us anymore, who really was the inspiration behind the series of meetings that we've had here in Orange County, or there in Orange County. I'm back in Florida over the last decade or so. All right, let's get rolling. As always, for educational purposes only, I'm a doctor, not a broker. Tools I use, I demonstrate what I use in my daily trading. I pay for the tools I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I will be speaking twice at the Wealth 365 event, one on Wednesday, one on Saturday. Typically the Wednesday's heavy education, very little sales, and the one on Saturday I try and show you why you want to buy the scanner. But I try to make them both worthwhile and educational. If you can use this link to register, I'd appreciate it. I don't do a lot of marketing. I don't keep mailing lists, but they do like to see that I'm trying to bring my folks in. So if you use my registration, they'll know you came from me. For those that like these videos, I do a daily video that's posted at this website. It's a stocksanddocs.com. I don't control the website. I send the videos in the morning, and they're posted typically before the market opens. That's it for the PowerPoint. Now let's talk about what I'm seeing in the markets. And it was an interesting Friday and interesting week. First thing is, there's two sets here. This comes out of HGSI, www.highgrowthstock.com. It's just one of the warehouse views, and I put a bunch of the important ETFs and indexes here, and I've got them ranked by the current interval from the 52-week high. So we all know the NASDAQ is down 33.4%. You've heard that before. You'll hear on TV the Russell's down 32.4%. And we know that the S&P has just broken into, I'm trying to make that, bear market territory, and the S&P is at minus 23.8, and the Dow is and the NYSE are just outside it at a hair more than 19% down. If that's all you know, then you probably are wondering, why is your portfolio down much more than that? Because even if you don't do leverage, if you're heavily invested, things like the FANG stocks leveraged minus 85, Bitcoin's down 77%. A bunch of ARCs are down in the 68 to 77 range. IBD 50 ETF, which is a managed ETF to mimic the IBD 50, is down nearly 50%. If you're small cap growth, and the best stocks picked by investors.com, businessdaily.com, the IBD 50, which is a great list when markets are good, if this looks as ugly as it does at minus 47%, how do you think your portfolio looks? And then you look at biotech is down 38%, semiconductors are down 36%. Then I look under the 5-day change column, and I see that the only things that were up were the dollar, interest rates, and the VIX. Well, if that's the case, then equities got pummeled. Bitcoin really led to the downside at 33%. Remember, the FANGs are 3 times leverage. So the FANGs were down 5%. Several of the ARCs were down big numbers as well. Semis were down 8.9%. Now, biotech was actually down less than almost everything else, down 0.8. On Friday, which is the one-day change, you could see that there were some green shoots that popped up, and maybe that leads a little hope going into the coming week. Over here, percent intervals was the 52-week low, and then the days since that. And you'll notice here that IBD 50 small cap growth set a new low on Friday, as did Bitcoin, and then so many of the major indices are just one day off their 0 1 day, which means we've pulled back to new lows across the marketplace. If we look at the sector performance, the S&P down minus 23, you could see leaders to the downside, technology, discretionary, and communications. If we look at some of the ways that I look at breadth of the market, we could see that on Friday, 73% of the stocks were up, the sectors were up, 72% of the industries were up, and 68% of the stocks were up. That's a pretty strong day, and here it is on one day. But if you look at 2-day performance, 5-day, 10 days in a month, the market's been in a funk with 100% of the sectors, as many as 98, 99, and 100% of the industry groups, and the majority of the stocks down on the month in each of those intervals. So one-day wonder or beginning of some hope. Warehouse review, this one takes a look at all the stocks based upon fundamentals on the 10th and asks the question, what happened going forward if you looked at performance based upon ERG, which is EPS strength, relative strength rank, and group rank, and how did ERG compare with percent gain? Well, you could see everything is negative, and the higher ERG, which is bad for growth, the worse it did. No surprise with the IBD 50. And if you look at EPS rank versus performance, the higher EPS rank, the worse you did. The higher relative strength, the higher group you had the week before. So that's really a bizarre performance, but just shows the pain and growth. If I look at the NASDAQ, and this is sort of my go, no-go. And I know there's a company that has something called a go, no-go indicator. This is just, do I buy or sell? Is the buying window open? And when the weekly bongo is red, to me, I'm very careful on taking longs. The dominant trend in the NASDAQ is down. Now, this here are kahunas. These just show some big move days, and we could see, I think, Monday this week, and then Wednesday and Thursday the prior week, we had kahunas. What's also very notable is if it's above 2% of new highs, you're going to get gray. If it's above percent of new lows, you're going to get orange. It's almost that there's a buyer strike in very few new highs, but tons of new lows, which is where the pain is. Now, we were sort of historical on the new lows on Thursday the 16th, and I'll show you that. 25% there. There are bigger numbers here, but that's a pretty big number. Over here, you can just see a picture of the NASDAQ. We're going to come back to that later. That's from HGSI. And you could see here minus 4.8% down on 5 days. Only one day off the low, so not a pretty picture. The NYSE, similar in many ways. Buying windows close. The kahunas, the same time. The phoenixes are exuberance, follow-through days to the downside. But then at the end of the week on the NYSE, we saw the bingo, and the bingo's baby out with a bathwater signal. Again, not any new highs this week on the NYSE, and like the NASDAQ, the new lows were pretty significant. And like the NASDAQ, we set a new low on the NYSE on Friday. The buckets, talking about historic. These were the buckets on Thursday after the close. 98% of the stocks in the S&P 1500 were below the midline of their Bollinger Bands. That's something notable. That improved to 96%, which frankly is still horrible on Friday. We also saw on Thursday 50% or more of the stocks were below their bands, and we would expect a mean reversion, which we saw here on Friday, where it's still high but improved. How bad was this day? If I look at this number here, the 98% below the midline, that is the 16th worst day going back to 1994. That's out of 7,500 plus days. This was the 16th worst performance. This is about the 24th worst performance over the nearly 30 years of data. Impressive, none, is all I can say. If I look at energy, last week I made a comment. Imagine what would happen to the indexes if energy rolled over. Guess what? Energy rolled over this week. You can see crude was down close to 10%. Natural gas in the U.S. was down a ton, yet in Europe, natural gas is up significantly. Um, and that's probably because the Russians cut off natural gas to a couple of countries that they felt were supporting Ukraine. Now, the U.S. has got an agreement with with Europe to supply liquefied natural gas, but it takes time to build facilities and get it there. I'd expect if this keeps going with the overseas natural gas, it'll pull the U.S. But this is clearly a change when you look at how far these markets have come in the deep green over here. Metals. Gold is kind of flatline, and you could see it's up 4% on the year, down about 1% on the week, on the day, and a little bit more than 1% on the week. Really nothing to write home about. I would point out that on the week, iron ore was down over 11%. I've been in and out of Starbulk, Zim, and other shippers, Golden Ocean. These things seem to follow the price of the Baltic Dry Index, and you could see we had talked about it coming down to trendline support, and it bounced and was up 4.71% on Friday, and that might drive some of those shippers higher. Interest rates, although they came down at the end of the week, there was a gap up on Monday, and so for the week, we still closed higher on the 10-year and 30-year. Down here, and the lower one is the difference between the 2 and the 10-year spread, and this is what they use for the inversions. When you see an inversion, we kind of saw another one. It suggests that we have a recession in the not too distant future, 6, 12 months, a year down the line. You already know that. But this is the one. This is the one that's got me nervous. Why? Because this measures the risk of getting credit. I hear from so many small businesses, technology, healthcare, that they can't raise funds. They try and get Series B, C, D, E, F, G, and the lending is tight. So what happens when the lending is tight? This thing starts to go up. So I look to the left, and we know this was horrible. This was the 2020, and then I saw this, and I go, my goodness, we're almost at the level we were late 2018 to 2019. And then I scratched my head and said, I think that was a bad time in the market. This is when the credit risk went up in 2018 going into 2019. So this is piling on if this becomes an issue, and it will probably lead, or potentially could lead, to further market weakness. Overbought, oversold, stocks above the 200, stocks above the 40 are both getting down to important levels. When I scrunch this up and look back to 2000, 1998 and up, you see we still got some more room to go to get down to levels like this one, which we've reached multiple times at reversals. Same on the 40. The one that was impressive, the T2121 stocks with new highs, new lows in the last 13 weeks. We're at the level where we usually reverse. Now, sometimes these are major reversals, and sometimes it's just a bear cat bounce. And I think right now, or dead cat bounce, a bearish dead cat bounce. I think right now, that's what I'd be expecting. I'm not saying that we're going to have a massive recovery at this point. Economic news, busy week. No monthly unemployment because it's the end of the month. But look what we have here. Forget Monday. That's today. It's a holiday. We got Barkin speaking on Tuesday. We've got mortgage applications, auctions, more Barkin and Harker on Wednesday. And oh yeah, Powell speaks to Congress on Wednesday and Thursday. The PMI, jobless claims also on Thursday, some energy, auction results, and then home sales and sentiment on Friday. Massive news week, And any of these Fed heads, especially Powell, can move the market. I am not a conspiracist theory person, but I just wonder if the Fed heads are going to go out and try and talk down future interest rates. I think that with oil coming down, that might give them a little bit of an opportunity to say things like 50 basis points, not 75, and data dependent. And I think any softening of tone could lead to a market rally, not necessarily a new bull market. Earnings this week, not many, but if you own one of these stocks, it's important. And if I had this in PowerPoint, it would say it is a judgment call to hold stocks over earnings, and it is bad judgment to not know when your earnings are reported. Expected moves. I like to look at this, and I have it on one of my monitors during the day if I'm watching the market, because the market's a mean reversion tool, and the expected move is the price of a straddle, and that's an at the money straddle. And so you'd be buying a call and buying a put because you're expecting a big move. And of course, the market makers who are selling you those options are going to set the cost of those options at a level where the move will not happen and then they win. 80% of the time or more when I go back and back test, the option maker wins. So the option maker didn't win, option seller on Friday on the past week, because you could see the gray bar is where the market closed the prior week. If you take those two premiums and add them together, the green bar is the point if the stock goes up. When it goes above the green bar, the option maker loses. When it goes below the red bar, the option maker loses. And if it's between the green and the red, the option maker is positive on the trade. So Monday we blew through the bottom. Tuesday and Wednesday we tried to get back and failed. And Thursday we just had a massive dump, a historical massive dump underneath the expected move. And then Friday a doji. Just looking at this, I would see there's a likelihood that we bounce here and try and move up a little, although I think it's more a reversion to the mean oversold bounce and not necessarily a change in the market. Similar on the NASDAQ and the Dow and the Russell. The VIX actually broke above its expected move but came back in. And the dollar just really on the week was just up a little bit, but every little bit hurts. Thoughts, bad week for the bulls despite some improvement on Friday. IBD says market in correction. Market is showing signs of overextension to the downside. Overbought, oversold indicator suggests that we are nearing a bounce spot. Energy rolled over and gas prices actually came down. Can this relieve some of inflation pressures? I got stopped out of some of my remaining positions and I'm holding the least amount of stock since 2008. Probably a good time to building a watch list, but I wouldn't start going in big until we get one of those follow-through days, or at least in the HGSI world, a kahuna and eureka following that bingo. Put in the back of your mind the markets get better before the Fed and the economy tells you the world is better. And if nothing else, this week reminded us of the fragility of bear market rallies. Monday, today is a trading holiday. Tuesday's open could be interesting. And as I pointed out, this is a huge news week. Just selfish promotion, but since I don't charge anything for these, I'm going to promote my speaking at Wealth 365. Again, I'll have this under the more button on YouTube. I'd really appreciate if you register with my name. And then if you like these videos and you want more of them, I do this daily on stocksanddocs.com. All right. Let's take a look at the market using wealth charts, and let's start here with the S&P 500. You can see that this week, I talked about last week, and I talked about leg 1 down, leg 2 down, and were we about to start leg 3 down? Well, we are clearly in leg 3 down. This white line here is my target. It's 338. God, I hope we don't get there. A lot of people are talking 350, which is an important point if we start looking at um, some Fibonacci's. Um, and but I'm looking at this because this actually is the, I'd have to go back far to show you, but that's actually the prior to the collapse in 2020, the high. We'll see if we don't come and touch it. So many individual stocks have come down and touched that pre-COVID high. Why won't the indexes? So horrible week, except you could be excited that you had a doji, and the S&P, even though it was down on the day, I believe a teeny bit, it closed higher than it opened, so you get a green candle, and it's a green candle low, which can be a one candle reversal. Uh, and at the low jump bar, which is extension. The Qs, similar pattern, also a green candle. And actually, unlike the S&P, we're up 1.22%. The diamonds, a green candle, but down a bit. Russell 2000 futures, green candle and up. So the smaller cap stocks were actually up, the NASDAQ and the Russell. The VIX not giving us a signal. VIX to 40 will hurt like the dickens, but when it comes down, it's probably time to buy. And I don't know if there's enough fear in this market, and that's one of the reasons why I think it keeps going down. And the dollar, not yet would say a trading range, but it's midway between the highs and the 50. I'd love to see the dollar and the 10-year come down because that would be supportive of stocks. Looking at commodities, I thought I connected. Let me make sure I'm connected on my Tastyworks. Oh, I am not sure why that's not working. Well, if the Tastyworks feed was working, you'd see the 10-year was up. I already showed you that on TC2000 pictures. But in fact, it actually came down Wednesday, Thursday, and Friday. Let me just type it in and just see if we get lucky. Yeah, Tastyworks must have turned off the feed because it was working a while ago. Maybe they're doing some maintenance. Gold, as I said, doing nothing. It's sitting on the 200. Oil sold off hard this week, but isn't it interesting? It bounced off the 50. I love it when it works that way. My guess is it's still going down some, but a bounce in USO, a bounce in the price of oil could stabilize some of the energy stocks that sold off hard. Natural gas, once it broke through the trend line, as they say on Shark Tank, it was dead to me, especially when it failed on the way up. And I am not in any natural gas. I mean, could it go up? Yeah, because of the European Russian situation. But for right now, natural gas is not working. If we look at what the theme of the market is, large caps and value remain in charge. And I think a large cap value, I'm thinking of defensive plays. If I look at the S&P 500 sectors on the hourly charts, these are ratios comparing an individual sector to the spider, and by using everybody comparing against the same, I like to see who's leading and lagging on this curve. Well, a couple things to point out. Materials and energy, former leaders, have tanked. They're not leading. Things are moving off the bottom. Healthcare, which we've been watching for the last several weeks, has been much stronger, as has industrials. And interestingly, it looks like staples, technologies neutral, utilities neutral. Over here, real estate trying to come off the bottom. Discretionary, not yet. So if I had to pick where the big strength was, I would say healthcare and staples. Healthcare, staples, and industrials. Healthcare, staples, industrials. If we go into my dashboards, this is a conglomeration. It's not just the CAT scanner. When we look at the heat map of the S&P 500, well, let's look at the sectors. Come on. There we go. Here are the sectors of the S&P 500. If we rank them by daily change, you can see indeed it was a strong Friday, led by technology, healthcare, and cyclicals, and interestingly, communications, real estate, and defensive, and finance. So that was an interesting day, to put it mildly. But you look at the month, and even the week, most of the things were negative. If we want to play the four I called out, healthcare, staples, technology, and industrials, I'm going to pick those sectors. And I'm going to hit compare. This is going to bring up all the industry groups in those sectors. Let's use the algo tool this time. Let's look at the daily algo score. And the only industries that have a positive daily algo are solar, which I know I like one there, tobacco, and shell companies, which are blank checks, so I'm not going to pick that one. If I look at the weekly algos that are positive, boy, there's not many. 1, 2, 3, 4, 5, 6, 7, and 8, and 9. So that's crazy. Those are the ones that are positive. Now, if I go back and look at what was moving this week, we'll fill in a few of these, because these are the ones that had percentage moves. And just will fill up all the ones between here and drug manufacturing. So I've now picked some leading industry groups by algo, which is probably slower, and then by price movement on Friday, which is obviously one day it's going to be faster. And I'm going to show you what we're going to do with those. So I've listed them here. And now I'm going to go compare, and that's going to bring up all the stocks in that group. And let's just go to daily algo, click on the top one. Let's go down to about 600, or how about 687. I'm going to hit my shift key, and I'm going to click into that box. All these things just got hit. Now I'm going to go back up to the top. I'm going to look at weekly algo, and there's no magic way. Everybody picks the way that works for them. And let's fill in the things that have a weekly algo. At least the first bunch. And you'll see what happens. All right, I'm going to hold my shift key down and take all the. All right. Now I'm going to make sure that I am on my bullish weekend review, which is right here. Let's add these stocks to my bullish list. So add to watch list. You can see here it's being done. Now I will tell you I've already done this for the bears, so I'm not going to go both ways. Now, if I go to Wealth Scanner, and I think I move this to quicker, I like the active, I got it on Swing Trader, so we'll leave it on Swing Trader right now, and you can see if you've been watching that there's a change at the top. Natural gas, which had been leading for so long, went from an 850 to a, I just saw it down here somewhere. Right in front of me, Jeffrey, where is it? Two something, I thought, to 273. That's a huge drop. It hasn't dropped out of contention. If I take it to a faster look, and that's what I was mentioning when I started, if I look at Day Trader for market rotation, and I think I like that because it's faster, it shows me that the SQQQ, despite a strong day on Friday, contra ETF to the Qs, actually is ranked first. The dollar, China, interest rates, short arc, volatility, solar, oil, gas. I'm kind of interested in solar, and I'll show you why. And then interestingly, gold and silver, but you're getting to single digits. If I go to my CAT scanner, and right now I'm in that weekend review, and I rank by number of dots, I see what comes up to the top. Now, the problem with this market, and you can tell sort of by looking over here, when that says minus 18, first of all, that stock is, at best, it's sideways. It's probably in a downtrend. It's well off of its, on a longer term downtrend. Short term is sideways to up. It's well off of its highs. 8.2 is not far off of its highs. But unless your numbers like 91, 92 like CGen, you're probably in a downtrend, and that means you're going to have overhead supply. Like look at AERI, ARI Pharmaceuticals. If I just look at the last couple of days, wow, it looks great, doesn't it? I had Volume, breakout momentum, PSAR reversal. Relative strength is great. OBV broke above the moving average. Buy, 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 buy. Well, the problem is that it's not the last couple of days. It's been in a pretty big downtrend. Does it go higher? Probably does. But I expect it to have some meet resistance here on the 50, big resistance on the 200. There's a lot of people who bought in here looking to get out. So I would be nervous about that. Could happen, but I would be nervous about that. So that's not what I want to buy. CCRN. Same basic pattern, 3 dots. Still, this one's broken above the 50, but there's a lot of congestion in here that could be resistance. CCXI actually is one that's on my watch list, and it too is going to have issues potentially with the 200. It's now higher. Most of the people that have bought since April are winners now if they've held on based upon the current price. So if this can get above the 200, I'm very interested in CCXI. But, you know, it's still going to have some of the same issues. Fold, another biotech company. This is what good looks like, is it's broken out, but now it's got to face with the 200. So, you know, some of these are going to work. If we were in a strong market, they'd probably all work. But I get concerned when I look at stocks that have lots of overhead supply. HLF, Herbalife. This is one that, you know, short-term base, higher bottom, new EMS signal, volume, breakout momentum from a squeeze. What's not to love? Well, what's not to love, again, is overhead supply. We've been in a downtrend for quite some time. These are these are companies whose charts are firming. They look good, but with the caveat, they are in downtrends. And I like pullbacks and uptrends to go long. JD, another one that looks even better as it's moving back up towards that 200-day moving average, but it's still below the 200-day moving average. Cadell, one that had great earnings, raised, and do you buy it here? Maybe, and maybe you make money, but this is a stock that's going to face, you know, trouble because of overhead supply in the 200. I did find some things that looked good and buyable. I'm not saying that this one's buyable, but this is, I'd rather own this, which I do, than necessarily own one of the stocks that has lots of overhead supply. There's almost nobody with CTIC who didn't buy at the high of the day on Friday that's underwater on the stock. So you have nobody sitting there saying, if it goes up, I can get out. If it goes up, I can go out. So there's a lot of stocks that looked like airy. There's not a whole lot that look like CTIC. I mentioned I liked TAN. Now, I don't think I have a solar. I do not yet have solar. So let me show you how I would make a watch list of solar stocks. I'm going to go to the watch list, and I'm going to come here. I'm going to go add a watch list, and I'm going to call it solar. All right, create watch list. I'm going to go to, let's see, I'm going to go to sector scanner. I'm going to change the funnel, default watch list, sometimes I can talk, to solar. I'm going to apply, and that's an empty watch list. But I'm now going to go in, I'm going to go back, start all over. I'm going to hit energy, and I'm going to find solar. Oh, where is the solar group? All right, let me see what I did last time. Return. Energy, and maybe, is it industrials? I've not looked for solar before, and so I've got to figure out where it sits. I guess what I could do is I could pick all the industry groups, but it's going to be in one of these four maybe it's, I think it's technology. Here it is. There's only 18 stocks in solar. and make sure the one that I want is there, and of course it's not there. So what I'm going to do is I'm going to click them all. It just means that the stock that I'm thinking of is probably under something else. I'm going to add those to watch list. It's going to go to solar. And then I'm going to add the one that's missing, which is D as in David, Q. So I'm going to go to my watch list. I'm going to open up solar. And there's those stocks. And I'm going to add a symbol, and that symbol is DQ. Apply. Okay, so now I'm going to go back to my CAT scanner because I like solar, and I'm going to find solar and see if anything passes my scanning. And I've got a couple. SunPower. I look at this and it's the same as Airy. It's not what the setup I like, but this one is. And so as I looked at stocks this weekend, this is one of my favorites. And why is it my favorite? Yes, it's been in a long-term downtrend. Okay. But it's broken above the 200. It ran up. It's formed a pennant, and perhaps it's breaking out from the pennant. This is DQ, and this is probably one of my favorite charts. Enphase and Solar Energy look very similar and are trying to break out from a congestion of moving averages, but DQ was one that I liked. I've been liking biotech, so we can look at biotech very quickly. You saw how easy it is to make your own watch list. Let's run it by here. We already looked at Airy. CGen is interesting. I have no inside information that is not available to the world. CGen is up here because Merck reported that they're interested in buying. Now, CGen is an exciting company. It's a company that I know very well, and I've done business with them. I am not currently a shareholder, unfortunately, of CGen, nor am I under any NDAs with them. But let's just look at and guess if you were a CGen shareholder and your stock back here, which was in 2020, was 211, 214, and this was the most recent high, and that was about 192. The stock closed at 165. If you were going to agree to sell your stock, wouldn't you expect to get this 190, 192? I would. So I don't think this is fully baked in. I don't chase things that are potentially under consideration for takeout, but that's why CGen gapped up. And then lastly, let's just see if there's anything in my buy watch that I put together. And this is not the consolidated list of stocks, the leaders list, but just my buys. And CCXI, QDEL, CGen, we looked at. CTIC was the one that was leading. Exelixis is another biotech. I like their story. I don't like their chart. I don't like buying things that are in the lower right-hand corner. It's simple as that. Sabra, I talked about on my daily several times. It pays a dividend. It's a healthcare REIT in a squeeze with volume and momentum. That one looks interesting. Look at the relative strength. So I like Sabra. Vertex is probably one of the bigger biotechs that looks like it's setting up. Pull back a lot here, but it's about to break above the 50. ALX is another biotech, again, similar, breaking above the 50. I talked about DQ and Enphase. And then GMAP, talking in my book. This is one that I bought. Now, you could say, Jeff, why did you buy this? And that's a very legitimate question. Biotech seem to be firming is the main reason, but I know this company. I don't currently work with them, so I don't have a non-disclosure, and I'm allowed to trade their stock. Once I work with a company, I don't trade them, and once I have any kind of non-disclosure, I don't talk about them. But this is a stock that owns a drug called Darzalex, which is a myeloma drug that is incredibly popular and growing, and they had a recent oncology meetings in the U.S. and Europe where they have a new drug that is, I think, very positive data and will be meaningful to the company. So that's to the long side. Now, do you want to go short this week? Well, certainly that's a consideration. It's a tough market out there. I think we have a bounce that's coming. So when I looked at the shorts, the ones that looked most interesting to me, frankly, were some of the healthcare insurers, which is strange because as a group, they're not doing too bad. Take a look at Anthem. Anthem is a great company. They own a lot of the Blue Cross Blue Shield companies, and a breakdown below the 50, actually the 200 here, after a significant run-up. All right, we go back here to 2021, February, the stock was in the 327 range and it ran up to 534. Is it going to come down and test its pre-COVID high? I doubt it, but this thing's broken below the 50, actually the 200. If it doesn't get above it quickly, where's it going to go? Maybe there's even better ones to look at in the group, and there is. The second stock here, Cigna Corporation. This one is just starting to break down, and then the other was Humana. So these are three very large managed care providers, and the one that's holding up the best here is not Cigna, excuse me, it's not Anthem, it's not Humana, it's Cigna. So if I was going to short one, or if I was interested in considering building a short if the market continues down, I might look at Cigna. Here it is. And why? Because big red candle broke down through the 50. We'll probably see relative strength turn down, and it's not so extended you'd expect it to bounce. Well, that was a ton of stuff. I'm tired. Again, thanks to Greg, Dave, and the rest of the crew for the wonderful meeting we had in Orange County. And thank you for spending time with me today. And again, I don't ask for much. I do these at no cost. I like to teach. I also like to support Wealth Charts, HGSI, and the other companies by showing you how I get value out of their tools. But here is how you can support me. Please go to your browser and register at wealth365.com/Dr.-Jeffrey-Scott. And this is 6 days of awesome education. Yes, there's sales. That was pointed out to me at the meeting. But we're all told the same thing by Rob Hoffman, who owns Wealth 365 and Wealth Charts. Give them value. You can sell something at the end, but give them value. You'll get lots of value, and since you're not paying for it, that's even better. Have an awesome rest of Juneteenth. We'll see you next week.